The following is for entertainment purposes only. We are not financial advisors. We are not responsible for any losses, only the profits.
Donation, check it out. We got the new shirts in. Finally got mine. These guys are quick. Pretty happy about it, how it turned out. Got this one in white. This is the Robin Hood bro. If you don't know what that dude is supposed to be, it's supposed to be Robin Hood. What do you think? You like it? Pretty pumped about it. So let's dive on in, all right? Goldman Sachs buys gold, and is it worth a buy now? Should we be buying gold and silver now? Goldman Sachs, can you believe it? Mr. Buffett, Mr. Anti-precious metal, his whole life he's been making fun of people, all right? He's making fun of investors who think it's anything more than just something pretty that you can sit around and just, he says, fondle around all the time and just hold on to it and think it's cool. That's what he called it, just something to play with. But now, guess what's happening? He did a 180. Sometimes it just takes a little bit of money losing, like he did in the airlines, to finally get him to wake up a little bit. We're going to dive on in and see if it's going to be worth our time or worth his. So Goldman Sachs, he has stated the following recently about gold and silver. On March this year, he said, "We have long argued that gold is the currency of last resort," which he has said the opposite of many times. Acting as a hedge against currency debasement when policymakers act to accommodate shocks such as one being experienced now. It's a lot to be said in that little sentence right there. We are beginning to see a similar pattern emerge as gold prices stabilized over the past week and rallied Monday as the Fed introduced new liquidity injection facilities with this morning's announcement. So what are they talking about? Quantitative easing, QE, the money printing, okay? The Fed putting in supposed fake money, not really doing it, but acting like they're gonna put money in so it just gets everyone to spend all their stimulus checks, put it right back into the economy. It's a great smoke and mirrors, man. It's great smoke and mirrors. So let's take a look at what happened in 2008 when the Fed stepped in and started and removed liquidity constraints. What does that mean? They started quantitative easing. So if they're going to remove liquidity constraints, they start printing money, quote unquote, not technically. But take a look here, okay? So gold was kind of headed down. The gray, which is the dark blue here, the light gray is the S&P 500. They're both kind of heading down. And then what happens? Right here, they started quantitative easing. What happens? Instantly, gold goes up. But do you see what's happening? How the S&P starts going down and the gold starts going up when that happens? Remember how I said there's that Jaws effect that it still kind of needs to happen? So that's kind of the scary part in the macro picture. The S&P still hasn't really taken its big dive yet, okay? But regardless, once quantitative easing starts, which actually started, by the way, the end of last year, gold starts going up, okay? So take a look at that. Back to 2009, look how high it was, all right? This was from Bloomberg, all right? And June 19th this year, they have also stated, however, as we have argued in the past, gold investments demand tends to grow into the early stage of economic recovery, driven by continued debasement concerns and lower real rates. So debasement concerns is basically kind of like devaluation of the dollar, because the more dollars you print, the less valuable it becomes. Yeah. They've also stated on April 7th that they do not recommend gold as a strategic asset class in a well-diversified portfolio. Okay. July 28th this year, after they raised their target, what they think that something should be priced at, they priced gold for, I think they had it like $1,800, what they said it should be an ounce. They said, you know what, we think it's supposed to be worth $2,000 an ounce now. But then they just raised it to $2,300 an ounce. And that was just at the end of the July, so that's really recently. And then after they did that, they said a potential shift in the U.S. Fed toward an inflationary bias against a backdrop of rising geopolitical tensions, evaluated U.S. domestic political and social uncertainty, and a growing second wave of Cerveza 1900 related infections, combined with a record level of debt accumulation by the United States government, real concerns around the longevity of the U.S. dollar as a reserve currency have started to emerge. guys are really good at putting sentences together, I think. Okay. Much will therefore depend on whether investors in the West remain willing to buy large quantities of gold even at current prices, which they have. So prices have been going up. People have still been buying like crazy because the people that are looking at the big picture realize that it's probably a good idea to have some sort of your currency, your dollar bills, wherever those may reside, United States, into a hard actual money that should preserve your wealth a lot better than something that is totally devaluing. You'd rather put your money into something that's going up. That's why people go to precious metals to preserve your wealth. Not necessarily to get rich, but to preserve yourself and keep yourself safe, especially if the dollar bill ever gets light switched. Analysts at the banks also lifted the 12-month forecast for silver by 36%, saying that they think it should be $30 an ounce. Just wait, they're going to keep following that up. Yeah. If they actually calculated a lot of this out, every calculation I've seen says that silver should actually be way more than that. So, I mean, where are they pulling these numbers from? Are they just like casually going up an extra 36% every time it gets close? I don't know. We'll find out. So, I will say that Goldman Sachs, they have climbed 281.2% in the past 20 years, which is pretty darn good. They're not swing traders, so they're not they're not trying to get these 200% or 300% swings overnight like a lot of us nowadays are trying to go after. But long term they've done pretty well. For instance, I brought up the S&P has only risen 136.3% over the last 20 years. That's something to keep in mind. They've done pretty well, but still they've let themselves get kicked in the bad times. Last time, I will say, like in 2008 and stuff, they didn't jump out until it was way too late. Okay, they got way too emotional with their investments. That's why I think it was smart when the Sachs were jumping out so fast this time. They jumped out of the airlines and stuff. Still not fast enough, okay, but at least they got out faster than they did in 2008 because they saw the big picture of what's really going on here. So what did Goldman Sachs just buy and sell recently? So this is my favorite one. Recently, they sold Goldman Sachs shares. All right. Occidental Petroleum, ticker on that, I believe, is OXY. That is big gas, big gasoline, a little bit of liquid gas too. They sold out of them. Yeah. Most shares in the big banksters like JP Morgan Chase, PNC, and Wells Fargo jumped out of them. They said sayonara. Even Restaurant Brands International, which owns fast food restaurants such as Burger King's, Popeyes. I love Popeyes. When struggling customers stayed home more and regional restrictions forced dining rooms to close. So they agree with basically everything. All the stuff I've been reading is exactly kind of my thesis on the law. So again, they're looking at the big picture, which is good this time. That's why I am not into any sort of fast food, but into restaurant stuff right now. It's a smart move. They bought more into Kroger. What's Kroger? That's your Vons. That's your Albertsons. Grocery stores. Okay, brick and mortar grocery stores. Also into Liberty Media. I'm kind of halfway on this one. Something I wouldn't put my money in, but Atlanta Braves baseball, fantastic, but not right now. Formula One racing, same. But Sirius XM radio, that's cool, but I still definitely would have not jumped into that right now. And $566 million worth of why we made this video, which is ticker GOLD. That doesn't mean actual gold they invested in, but this is an actual miner, a gold and silver miner called Barrick Gold, ticker GOLD, Barrick Gold, right? They're based out of Canada. These guys are massive. I don't know if they are the biggest, but they're like one of the top 5, I think, for sure. They're massive. Anyone who's into investing in gold and silver, everyone knows Barrick. These are the big boys where, small mines will start, explore it for 5-10 years or 1 year or whatever. And then once they start up and prove a little bit, Barrick are the guys who will step in and say, here's a blank check, fill it out, give me all your assets, see ya. Yeah, these guys are aggressive, and big boys, big ballers. 1.8 billion shares, though, out there. Wow, that's a lot. It's a lot of shares, okay? Market cap of 48 billion, that's pretty massive too, which has a pretty good valuation to share price. at least in the mining sector. There's still tons of mining stocks out there that are like way undervalued that we've talked about. I probably should do a video on like my top 5 mining picks right now. We'll get to that later. Let me know down in the comments if you want me to do that. I think we should do that. But anyways, their valuation compared to like most big boy stocks in the S&P is actually still way below even them. So their P and E ratios and all that. So they're still undervalued. So, but tons of tentacles out there in other mines. So, they've got their tentacles, their octopus tentacles, in all over the place. They're all over. Why I like them is they have many mines in Nevada, which, if y'all know me, that's one of my favorite places to have a mine. They've also got mines in Dominican Republic, Argentina, which I don't like having mines in. This is why I've never got in there. And then this one for sure in Papua New Guinea. Why not Papua New Guinea? Why don't I like them? Because they've had major problems in Papua New Guinea where the government, you can look this up, the government literally goes up to businesses there and they say, hey, we're taking over. We're going to nationalize this or whatever we want to call it. And they basically just take it over. Like, see ya. Okay. I think it might have been Barrick that was involved with the lawsuit with Papua New Guinea. I don't remember if it was, but there's a big miner that got involved with it. And I didn't keep up with it, but this is why I don't like investing in mining when it's in places like South American stuff, because weird stuff like this happens, or in Africa, like, dude, it's dangerous. They call them the AK-47 mines. Like, dude, there's like guys who come in and just like kill all the miners and just like take over and claim it's theirs and steal everything. I mean, dude, it's nuts. So forget that. I don't imagine, if everyone rallies into this and something like, Papua New Guinea jumps in and says that, or, whatever happens. I mean, your likelihood of that happening in Nevada is super slim. Canada, super slim, and Australia, super slim, which are my favorite place to mine. Okay, that's why. So they are also well known. They're solid. They're a gold and silver play, so it's not just like one or the other. They are in many non-swap nations with the United States, which is not good. I'll probably try to do a video on that someday, but basically what that means is a swap nation is one that can basically trade their funds and stuff for American funds and stuff. Okay, so there's places like, let's just say like Russia. They are not a positive swap nation, so they can't really like turn their dollars and swap them over for the United States. And the big picture of that is not good, but regardless, looking at mines, you want them in positive swap nations, not non-swap nations, and a lot of theirs are in non-swap. The PE ratio of 11, which is totally fine, good, for miners for sure. They do pay a dividend, which is rare for a miner, but they pay, it's small, but 1.04%. I'm not a dividend guy, I could care less about them. That's how I play, that's how I roll. Tons of volume. I know some guys that actually day trade this, and it's actually a very predictable play. If you're looking for someone who wants to do some like weekly swing trades or bi-weekly swing trades, dude, it's like, if you're used to something even more volatile like SPACs and stuff, Barrick's actually a really good one. I know some friends that they just religiously day trade it, up and down, up and down. The other deal is it likes to go with the price of gold. So, I mean, it literally pretty much follows it. You could probably put a chart on top of, gold on top of Barrick, and you'll see they pretty much ride the same. So, kind of tell what's going on. Just watch gold. So that seems like a lot of money. The $566 million that Buffett just put in. But you got to realize that that's really not a lot. I mean, it is a lot of money to everybody, but that's still less than 1% of his total MERS. Yeah. So he's got more than 99 times more than that in his MERS. All right, let's Gucci MERS. So amazing. So how do we make money on this? So why do we care? I think that we need to jump into silver mostly and gold miners. But which ones do we buy? So I've talked about it many times, but essentially silver is usually always lagging behind gold. So like, for instance, gold is at all-time highs right now. Silver's only 50% there. So for silver to catch up with gold, it's still got to 2x. I'd rather be in something that still has historically 2x before it's been $50 an ounce. It's only like 25-ish, than something that's already at all-time highs personally. And these two always pretty much roll together for the most part. So let's head to the charts and take a look at what gold looks like. I haven't looked at gold in a long time. I want to take a look and show you what in the past 2 years gold has done. Gold has gone up 63% in the past 2 years. Okay. Now let's go over to Barrick. How much has Barrick gone up in the past 2 years? So Barrick has actually gone up 118%. So, what do you think of that? So which one, just based off of that, do you think is going to be the better investment? 118%, 40%. I'd say Barrick, So they're still going up. You can even look at them as they're kind of like a 2x ETF of gold, Because if you look at their charts, like I said, they pretty much look the darn same, okay? Let's take a look at gold though. We rode this channel all the way up. It finally broke. And what happened, it got to the high, all-time highs, and then guess what happened? Of course, people took the profit, but looks like we've got a nice consolidation line here. Okay. So it looks like we are consolidating. It went down and tagged this green line again though, which I thought was very convenient. The same channel that basically rode us all the way up. Actually need to move it up a little bit. There we go. And then now it hits it even perfectly. All-time highs came back, tagged this, then went back up. So that basically proves it. So it proves to us that it's more than likely going to stay above the green line from now on, at least the 1859 channel, all right? So bounced right back up, said, rejected, let's stay above, it. So now we're sitting at, 1945. I think it's gonna still consolidate. We're gonna have a nice channel, and then it will start breaking up again. But this was a fantastic confirmation here that we are going to stay above this channel. Isn't that beautiful? I love seeing that. Okay, let's take a look at Barrick itself. Just like I talk about, so many people out there are talking how, gold is such a safe asset and silver is even when economies tank. It is not, okay? It is if you have the physical thing in your pocket, because if stuff really goes crazy, you might be able to trade it for a house someday or whatever. But look what happens, okay? It always tanks along with the S&P and the QQQ and everything else, but it is one of the fastest things to recover back up. So don't think that when and if the QQQ and the SPY do tank again, this will not go with it. It will, all right? But let's take a look at what we have and see if I can find anything. It looks, we could probably draw a line here for us. Throw out a ray about right here, make it green because we want to go above it. So we rode up, just a nice little dragon, okay, went up, and when gold had this little sell-off last week, this thing did the same exact thing. It even gapped down, which was nasty, but it did it. Right now it's trying to consolidate. It's definitely in this channel of about $27 though. I personally see this probably trying to go up here next week though. Let's see if we have any other lines back here. Let's go to the 5-year. Let's go all time. Oh yeah. So we have a line here at 30 that we want to hit, which is basically, well, we already hit it. Look at that. Make no mistake, computers do run the game for the most part. Look at that. Back in 1993, and then in 1996, and then it pretty much used it here as the major support, going down back in 2009. It even used it again in 2012, and then it crashed through it. But look where we're sitting. We're sitting right there. Of course we are. From there we might be able to go to 36. So I think if gold, channels up next week, that we could be headed up. We could be headed up to trying to hit 36, possibly the 32. But we'll see what this Goldman thing can do. Is it going to help us pop? We'll find out. All right. So Barrick and all other mines were hurt, either hurt or had to stop production completely and slow it down because of the Cerveza recently. So there's still actually a total shortage of physical gold and silver out there. There totally is. But regardless, Barrick's new Q2 that came out with their financial numbers, it really wasn't that bad. Okay, so in Q1 they were able to produce 1,250, I believe that's 1,000 ounces, and then in Q2 they still pulled out 1,149. So they really didn't get hit that bad. They're usually trying to increase. So they were probably slated to probably hit like 1,250 to 13. They were probably trying to hit like 13 or 1,500 ounces, but they only went down a little bit. So they're still doing good. They're still doing fine, and they're so exposed geologically around the world that there's some places where they were able to keep going, but a lot of them, even in Mexico and everything, were just like shutting them down. Brazil totally shut down. So what's my prediction? Should we buy Barrick? I think it's a slow-moving play that likes to move with the price of gold. I do think Buffett coming out and buying them is a big deal and will add more confidence and more new buyers into the sector and into the company. So there's lots of, which I think is kind of strange to me. I haven't really understood it, but there's lots of young investors that still really look up to Buffett. A lot of times it's like almost every generation, like every 10 years has their main guy that they use as their pogo sticks to jump in and out of and with, right? But it's odd to me that somehow Buffett has still remained what I see as still like the top dog guru that people listen to and look up to. Even all sorts of young YouTubers like always quoting him, and it's like to me it's so annoying because it's the same quotes over and over again. But to me it shows me something, like there is something about that guy. I mean, he's one of those like snake salesmen that you don't know he's a salesman, but he is. Those are the best salesmen in the world, all right? If you ever want to learn how to sell, listen to that guy talk, okay? He's the dude's genius class for sure, all right? But I still think it is going to hype, and it is going to get even the young investors involved with silver and gold, as a sector as a whole, but also directly into Barrick. So I think it will be interesting. With that amount of shares though, it will be hard to get that thing to go parabolic. So it's not like a lot of the stocks the younger crowd trades, like SPACs or the penny stuff, where they can just go absolutely nut crazy, 10x, 5x. We're not going to probably see that, okay? But it will be interesting to see if this does move, because no matter what, people trust the big daddy, all right, Mr. Buffett. I think Barrick will rally till probably, I don't know, like Wednesday night-ish. It's usually what happens with miners. They're pretty slow to react. They're not near as volatile as what a lot of people are used to. I think Thursday we'll probably see some consolidation, and then Friday there'll be some sell-off as far as Barrick goes. Possibly with the precious metals too, we'll find out. But the macro picture is that it will continue to slowly rise. I think until the next Hulk smash, okay? Until the next big tank like we had in March is going to go way worse than that. I think the precious metals are still going to just be, going up. People are taking profits and going up. But where I will go with the spot, or where it will go with the SPY and everything else, and then once the next big dip happens, that's when it will zoom up again, and then it will go totally parabolic and go to freakish new highs. Okay, maybe 10,000 an ounce or 5,000 or whatever. So Eric Sprott, if you are in the mining sectors or you study this at all, he's a name that's going to get brought up. Dude is smart. I like this guy because he's a trigger puller. Okay, the dude sees something, he pulls the trigger. I like it. Right? I kind of look at things the same. Business, money. I like jumping in, out. Going with the trends, following it. The man, the myth, the legend, the investor in gold and silver has been moving his bigger and almost all, I think, positions into small miners and exploration companies. About a month ago, he started doing that. Okay, so he got out of stuff like, let's just say it was Barrick, or I don't know if he's in Barrick, but he's in a lot of bigger and medium-sized miners. And about a month ago, he started pulling out and getting into the small ones. Why? Because he understands what matters most and why we're all here, and that's multiplying. So he's going now after these smaller miners, because companies like Barrick, for them to 2x, man, that could take a long time. Like I said, even with this news, to see that 2x is probably not even going to come close to happening whatsoever at all. We might see like an 8% spike, if you ask me, maybe 8 to 11, maybe. We'll see, but in these smaller miners, it's kind of like the penny stocks, well, because a lot of them are, but they can absolutely go bonkers. They can go like 3x in a week, 3x in a month, or whatever. So, he's someone to listen to if you're interested in this sector. Let me know again if you think I should do a video like that, like a top 5 miners maybe to get into. I think that'd probably be a good one. If you have any other plays you want me to take a look at, please put them down in the comments, right? And if you haven't subscribed, please subscribe. It helps out the channel, and hit the thumbs up. It just helps the algorithms out. And thanks again, everyone. You have a good rest of the night.